I met Paul about probably 4 months ago, 5 months ago. I heard him talking in some short sales issues and bankruptcy. And I got together with him and we formed a team with Emerald, myself, and Paul. And it's been doing good. And Paul is a very knowledgeable CPA and bankruptcy attorney that will talk about different issues in short sales. Now, he's an attorney and he took the time to come and speak for you guys. So let's give him a big hand.
Thank you. Good morning. Good morning. So short sale. Short sale, you're short selling because the homeowner is in distress financially, right?
Right.
They owe, let's say they owe $450 on the first, and the second they owe $150, but the house is only worth $425, right? And most likely, not all, but most distressed homeowners has credit card debt. Okay, so let's call it $80,000. We'll go with this example for the next half an hour. Okay. So I've given you a sort of a postcard. Okay. When you look at the postcard, you see a question mark and the house in the middle. So every distressed homeowner has to figure out, okay, I am in trouble. I receive a notice of default. What do? Do I take one of the arrow and do a short sale? Do I take another arrow and do a loan mod? Do I do nothing, quote unquote, strategic default? Or do I do bankruptcy? Which way should I go? And those are your four options essentially. Okay? Every single direction you go has some sort of legal implication. AKA, do I owe anything on the deficiency? Right? What is California law on deficiency? What about the IRS? I lost my home, but I got a 1099. What the heck do I do with this?
Pay.
What's the rule?
Pay.
Because primary resident is different than rental property. What's the rule? Okay? And then the third important one is you're out there prospecting. I would like you to help the homeowners. Okay? Because the more homeowners you help, Zig Ziglar, you heard of Zig Ziglar?
Yes.
It says the more people you help, if you help enough people, you're going to get everything you want, right? Okay. Most homeowner wants to maybe try to keep their house. Okay? How do we do that? Can we get rid of this 150?
Yes.
And maybe get rid of this 80? Maybe they can keep their home now. Maybe they're closer to par. Okay? We'll talk about it as the third thing. Okay? All right. So let's start off with deficiency. In California, when the first lender forecloses on you, they're done. That's the number one rule. It's Civil Code Section 580B as in boy. Okay? The first lender. When they foreclose on you, it does not matter if it's a purchase money. It doesn't matter if it's a refinance loan. That's the number one rule you should walk away from here today. 580B as in boy. It's California Civil Code. When the first lender forecloses on you, they're done. I don't care if it's purchase money, I don't care if it's refinance, okay? What about the second mortgage? What about the second mortgage? The second mortgage, the answer is depend. The first question you want to ask the homeowner is, how did you get that second mortgage?
Right.
If the homeowner says, I don't know. If the homeowner says, I don't know, most likely it's an 80-20 loan. Okay? Most likely it's an 80-20 loan, and most likely that's called a purchase money. Okay? In a purchase money, the second is wiped out as well. Do you know why purchase money are wiped out second? Do you know the rationale behind that?
No.
The rationale is this. In 1933, California passed a law that says, bank, if you choose to loan a total of $600,000, to a house that's worth 425, and when you foreclose, it's your problem. That's fair, right?
Yeah.
However, if the homeowner takes this 150 and goes to the Bahamas on a vacation, buy a Mercedes-Benz, start a business, that is not a purchase money. Okay? Even a line of credit, that's the same thing. Line of credit, refinance second, even your house is gone, it sticks around. Does that make sense?
Yes.
We don't punish you on a purchase money because it's not your fault. We want to make the bank a more responsible lender. Okay? But if you touch the money and you do something with it, you sort of, quote unquote, profit from it, you're on the hook. Okay? Later on in the third section, we're going to talk about how we can eliminate that as well and allow you to do the short sale as well. Okay? You know, in the third section, what I want to talk about is bankruptcy and short sale. How you can interplay between the two. Okay. Yes, sir.
Are we talking only California or federal is included in this?
Okay. Here specifically, when I'm talking about deficiency, like Civil Code Section 580B, I'm talking about California only. But when I talk about the IRS, by the way, do you know what IRS stands for? Yeah, what does it stand for?
Internal Revenue Services.
I think it stands for It Really Suck.
Hey, like that.
So when I talk about the IRS, when I talk about bankruptcy law, I'm talking about national. Okay? All right. Okay, so the second. So you lose your house, if it's a refinance second or HELOC, it stays around. Okay? All right? And that applies both in a rental property and primary residence. Okay? Short sale. Remember I started off with saying that if in a foreclosure, you don't have a deficiency as to the first lender? California law, short sale as of January the 1st, 2011, it's the same rule. So that should facilitate your business. Okay? There is no deficiency. Bank of America, no lender can reserve a right to go after the difference. To go after the difference between the 450 and the 425. Okay?
Is that in just owner occupied? Is it still just only owner occupied?
No, both. When you do a short sale, that's the rule.
Even if it's a rental?
That's right. That's the rule. So that should increase your business. Hey, what I want to do here is this, guys. Here's the objective today. The objective today is I want to clear out a lot of misinformation. What I want to do is this. If we can help the homeowner keep their home, let's do that. If the best solution is to short sell their house and they don't have a deficiency problem, nor an IRS, then let's short sell their house. Okay, that's best for them. Okay? So that's why I'm taking step by step, first of all, to talk about deficiency. Yes, sir?
Did you say that the HELOC
Stays
or
around.
a purchase money second does not get wiped out if the first forecloses?
No. I said a purchase money second gets wiped out as well.
Okay.
Why? Because it's really not the homeowner's fault. You gave me the money, Bank of America, to buy this house. Right? You should be a more responsible lender. Okay, that's why you're wiped out. But in a HELOC, you took the money and you bought a Hummer. You went on a vacation. You see that is a little bit different.
Right.
So a HELOC stays around.
Makes sense.
Yes, sir.
One more question because we jumped past it. So purchase money first or refi first, no deficiency there.
In a foreclosure, yes. In a short sale, yes. Okay, so if they only have one loan, good. There's
Yeah.
no deficiency problem either way. Okay? And so that answers the next question. If I don't have deficiency either way, why wouldn't you want to do a short sale? Because FHA says you can get another loan in 2 years. Right? Why not 3 years? Okay, well that's better than a foreclosure on your record.
Yeah.
Okay. Yes, ma'am.
Sorry, going back to the January 2011 new law, you said investment property and owner-occupied property, as long as you have one loan, the bank cannot come after you for a deficiency.
Correct.
Okay,
1 to 4 units.
1 to 4 units.
Yes.
All right.
Okay. So that is sort of deficiency. And yes, sir.
All right, to clarify one additional step. So it wipes it out for the house, but not necessarily for the borrower. Correct.
Okay. Let's separate the two ideas. Okay? It wipes out totally. Okay? Hey, if you don't owe it, look, a mortgage, like a lien, is on the house, right? Anything that's attached to you most likely could come after you personally. Okay? So in a deficiency, we're more concerned with the individual. Yes. That's because a lot of time, guys, homeowner gets their wage garnished because the second may come knock on the door. And today I want to help you guys avoid that problem for the homeowners. Okay? All right. Yes.
Based on your example, what happens to the parents who co-sign with the...
Okay. Good question. Co-signers are stuck. Okay? Co-signer can, the bank can, if the bank drafts the co-signing correctly, if the bank drafts it correctly, the bank will make sure that that clause doesn't get waived if the bank does their job correctly. Yeah. All right?
Wow.
But we'll talk about different way how to get rid of the HELOC and the refinance second a little bit later. Okay. So far so good on deficiency? Okay.
I guess
Yes.
my question was on the 1099C.
Mm-hmm.
I was told that if you live in the property and you short sell it, you get a 1099C, you do your taxes, and then you don't pay on that money. But under this new law, does that also apply to the investors that get the 1099C? Does that 1099C also get wiped or no?
Okay. When we talk about short sale liability to the homeowners, we're talking about two separate issues. Number one is the bank,
And the
aka
IRS.
deficiency.
And the
Okay?
IRS is a total different issue.
Second, IRS tax, it's a separate matter. So
Yeah.
we finish with a bank. Let's move on to the IRS, which is going to address your questions. Okay. President Bush passed a law that says, hey, if you have a primary residence and you're married and you have a foreclosure or a short sale and you receive a 1099-C, okay? Now 1099-C stands for cancellations, a debt cancellation. When you originally borrowed the $500,000, you didn't get taxed on it, right? Why?
Pending.
You didn't, when you first got the loan for $500,000, there was no tax to you because you promised to pay it back, right? But now you took my $500,000 and I took your house away and I only sold your house for $250. Now I'm short $250, right? So that's why I give you a 1099. Okay? So now you have to figure out what to do with your 1099. The law is this: if it's your primary resident, 1 to 4 units, primary residence defined as you've lived there 2 out of the last 5 years, you get up to $2 million debt cancellation. Okay? $2 million.
That's the form capital gain, capital loss.
No.
Different.
Capital gain is a separate concept. Okay?
Totally different.
Capital gain is a separate concept. It may have some tax, but rarely if it's the primary resident, if it's a primary resident, most likely there's no deficiency like we talked about. Most likely no tax. If it's a primary resident, President Bush. So most likely those 2 rules right there should pave a lot of ways for you to do a short sale. Yes, sir.
Is the $2 million cancellation one time, a lifetime, or is it per transaction?
For that transaction.
For property.
Yes, for that transaction, all right? Okay, what happens if you have a rental property? That law doesn't apply in a rental property, okay? But there are exceptions. An exception is this: you don't owe any taxes either if you are insolvent. Okay? What's the definition of insolvency?
Broke.
That's right. So basically it's this. Insolvency is you put all your liability on one hand and all your assets on one hand. Liabilities are your mortgage, your car payment, everything. Your assets are your 401k plan, the value of your house. If you have more liability than asset, then you are insolvent. Okay? And when you're insolvent and you either short sell a rental property or foreclosure, you don't owe taxes either.
So if I may say, does it mean that when the seller receives their 1099 and it's a rental, are they gonna have to apply for bankruptcy for that?
No.
Because how do you explain it to
So
them?
hold on a second. No. Insolvency does not mean you file bankruptcy. Insolvency is a test. It says, hey, it's not my primary house, it's my rental property. What do? Well, the exception to the President Bush law is the insolvency rule. And the rule is I have more liability than debt.
So it should be automatic.
Yes. So those three things right there should clear up a lot of obstacle to do the short sale if that's what the homeowner wants. If you have no liabilities to the bank, no liabilities to IRS, why would you want your home in foreclosure, right? Does that make sense? Okay. And so what I do is this. You all have my cards, okay? When you come across a homeowners that may need a little bit clarification on what are their liabilities, you can call me. In addition to being a lawyer, I'm also a CPA. I can address both issues for you.
Nice.
Okay? Just a 5-minute phone call, conference call, you, me, and the homeowners. I can clear up that issue for you. Okay, next. Next is actually the most important part I want to talk about. Because it's going to make you it's going to make you different than other realtors. Okay? How do you get your short sale, by the way? Referrals?
Napkin dogs.
Cold call, right? Prospecting?
Advertising.
Advertising, right? Okay. So, what I suggest to my team is this. The number one goal is, hey, homeowners, what is it you want to do? How can I help you? How can I help you keep your home? Okay? How can I help you keep your home? Let's do an example. Let's say I owe $450 on the first. Let's say I owe $150 on the second. The house value is only $425. And I owe $80,000 on credit card debt, and I have a notice of default. Okay? All right. So, when you file bankruptcy, you all understand that you can eliminate the credit card debt, right?
Yes.
Why? Exactly. Unsecured debt, there's no collateral, okay? In this day and age, you can also eliminate the second mortgage completely. Why?
Unsecured. Unsecured debt.
Unsecured.
It's unsecured after nobody.
Okay. The answer is correct. It's unsecured. Here's why. Just like Joe said, if they were to sell this house, which was $425, they probably net what? Maybe $350, maybe at best, right? $350 is not even enough to pay the $450. Okay. And so what we do is we get an appraisal to show the judge that the house is worth only $425, and the judge will allow you to eliminate the second mortgage, the $150 and the $80. For some homeowners, if you can eliminate these two debts, they may be able to keep their house. Okay? Yes, ma'am.
This is through a BK.
Yes. This is bankruptcy now.
Yeah.
Now we're getting into bankruptcy law. Now we're...
Step 7 or 13?
That's a chapter 13. Okay? And chapter 13 is very powerful. It allows the homeowner to keep their home permanently.
Right.
Okay? So let's say, for example, the homeowner owes $30,000 in mortgage arrearage. Okay? They owe that in the back. And they're in foreclosure. Okay? When you file chapter 13, we can eliminate this 150, we can eliminate the 80, and they can keep the house permanently if they do two things, if they pay two things.
Arrears.
If they pay the arrears, this 30,000, we take it over maybe 60 months. Okay, you make that payment, and you also make your regular mortgage payment, then you get to keep your house permanently. You are out of foreclosure.
Paul, but they have to qualify for the BK. What's the rule of thumb of their qualification?
Okay. See, this is where it's gonna make you different. Not everybody can pay the first mortgage and the arrears. Okay? Not everybody can do that. But hey, you want to explain to your prospect, to your client, that that is an option they can do.
If they qualify.
Okay? Have you heard about things out there where, hey, I'm going to sue the bank and I'm going to keep my house, but I'm going to stop foreclosure? Have you heard about that?
Yeah, very common.
Very common, right?
How do they do that?
Do you want to know if it works or not?
It doesn't.
Okay, let's talk about the theory behind this. This is a check, okay? It's a check. What's your name?
Maria.
Maria. So let's say I write a check to Maria. I give it to Maria. And then Maria, she can endorse the check, right? What is your name?
Gloria.
Gloria. She can endorse the check to Gloria. Now Gloria can cash this check because of the UCC rule, the Uniform Commercial Code. That's why whoever holds this original check
It's the owner.
is the owner of this negotiable instrument. Your mortgage is nothing more than a negotiable instrument. Whoever holds the original owns your house. Back east, like in Florida, the bank has to sue you to evict you.
Yeah.
So when they sue and evict you, you ask Bank of America, hey, show me the original note.
Yeah.
Because if you foreclose on me, Bank of America, what happened if Wells Fargo comes with the original note? Then I owe them. Right? Hey, back east, that theory works, but not here. Here, they don't even sue you. They just give you a notice of default.
Yeah.
Trustee sale, you're gone. Okay? So I want you to also look out for your clients or the scam out there. Okay? Judges in California would say, you know what, I don't care about the original. Just the copy is good enough. All right? But what I've told you about bankruptcy, Chapter 13, that is the federal law. It flats out work. It doesn't work for everybody because not everybody has the money to do that. Okay? But that is an option. Most individuals have, in these days and age, have tried a loan mod. It's been denied, right? So they're just listening to anybody to come to them and says, hey, I can save your house. And there's a lot of scam out there. Suing the bank, transferring title, all that stuff, eventually they're going to be in foreclosure. And that's a shame. After losing $6,000, $7,000 to the lawyers. Okay? It doesn't work. What we talk about here is just the basic of what works. So what happens is that when your homeowner calls you and you call me on a conference call, 5 minutes I can ask them, how much money do you make? What is it you want to do? You want to keep your house? Let's talk about it. How much do you, what is your monthly mortgage payment? How much arrearage is it? And then how much money do you make? If you make enough to cover those two items, you can keep your house permanently. Okay? If not, I'm so sorry, I'm going to tell you right now. Do a short sale. Chapter 13, you cannot, the judge won't approve it. Okay? That's an honest answer, right?
Yeah.
Okay. Bankruptcy, Chapter 13, Chapter 7 stops trustee sales on his back. Okay? When your client has a trustee sale next week or 2 weeks from now and you can't postpone it because sometime after 4 or 5 times postponing, the lender may not give you another postponement, okay? And let's say, for example, you can file a bankruptcy. It will eliminate your credit card debt and it will give you more time to do the short sale. Because a bankruptcy stops for the foreclosure. Yes, sir.
If the lenders file a notice to remove immediately as soon as you file bankruptcy.
Okay. Some lenders do and some don't. And even if they do that to lift the stay, doesn't mean they're gonna do a trustee sale on your house either. There are foreclosure mills attorney, and sometimes they file that paper just to collect fees from the bank. Okay, all right. Just because they do that doesn't. Hey, a bankruptcy. Let's say if you cannot afford the payment, I'm gonna be honest with you. I don't know how much time I can buy you in the house. Maybe 4 months, 6 months. And if he does a short sale for you, maybe another year, okay? But it will at least wipe away the credit card debt and at least gives you more time in the house and gives more time for the realtor for you to avoid a foreclosure. Did you have a question?
Chapter 7, is this the PQ that you're talking about?
Yes, a chapter 7 says, you know what, I give up. A chapter 7 basically is I don't have enough money to reorganize my debts. A chapter 13 allows you to reorganize your debt by eliminating the second mortgage, by eliminating the credit card debt, and you can keep your house. Okay? So I think when you go to the homeowners with that perspective, I think you'll be more welcome as opposed to, hey, I would like to sell your house, right?
Yeah.
Hey, if truly, if the homeowner wants to keep their home and they can afford it, let's help them keep their home. Wouldn't you want that to be done to you if you were the homeowner?
Yes.
Yes.
Okay, and this is federal law, flat out, no problem. Okay, so every single distressed homeowners you speak to should be part of your short sale pipeline. Okay, they're either gonna be a short sale or they're gonna go through bankruptcy to try and keep their house. Okay, and sometime when they're in bankruptcy, when they don't make the 2 payments that I talked about, it's not your fault, they fall out of bankruptcy, but then you can do the short sale now. Follow so far?
Yes.
Yeah.
Yeah.
So with distressed properties, if we do it correctly from the get-go, there should be no foreclosure. Unless the bank don't want to approve the short sale, okay? We should at least have enough time to put in the short sale package. Okay. Let's go back to my situation where this 150 is a HELOC. Okay? And you do the short sale. So sometimes the HELOC's gonna stay around even after the short sale, right? Right?
Yes.
Even though the 5,000, 10,000 that Joe talked about, the reconveyance is just to release the lien on the house. So how does the homeowner deal with that 150? Okay. So here's where we can either do the bankruptcy first and then do the short sale. Because then you can tell the second, you know what, second, you're wiped out already in the bankruptcy. You're done. So why don't you take your 5,000, 10,000 and release the lien? Because bankruptcy will wipe you out already. Okay? So that may be a situation where it gives us a chance to do some planning. Should we do the bankruptcy first or should we do the short sale first? Yes, sir.
That's chapter 13, not 7 for the,
No.
or it's both.
Okay. A chapter 13 is when we want to keep the house.
Yes. Yeah.
If you have money, meaning you have regular income, have a job, we can do a chapter 13 for you by eliminating a lot of your debts, right? If I remove the second mortgage, if I remove the credit card debt, now you have less debt. Now you may be able to keep your home. And hey, look, you might have been in foreclosure because you lost your job and now you got your job back. Right? Now maybe you can afford it.
Yeah.
Okay?
13.
Hey, if the homeowner can afford to keep their home, there's a federal law that allows them to keep their home. Okay? And this what I talk about here is not a loan law, it's a federal law. The bank must follow. Yes, sir.
How much do they need to make to be able to hold onto their house?
Okay. All right. Good. Let's say the first mortgage, the regular payment is, let's call it 2,000. The first mortgage. Okay. So let's make it easy. The 2,000 includes property tax and insurance as well. Okay. Let's make it easy. And let's say they lost their job, so they're behind by 30,000. They're in foreclosure. Okay. What is 30,000 divided by 60? What is that?
500.
500, okay. All right, here's a magical number. If 2,000 is your regular mortgage payment, and you're behind by 30,000, that's why you have an NOD. If you make these two payments, you can keep your house.
Yeah.
So how much money is enough? If you make $3,000, is that enough? No. What about, are you gonna eat?
Yeah, they look at all that.
What about your gas? Okay, so to answer your question, let's say you make 6,000. That's probably enough. Okay? But if you make 6,000, would you have enough to pay this 30,000 off right now to stay away from foreclosure? Probably not. You see that? That's how we can help the homeowner keep their home.
Was there a percentage, like a DTI, debt to income ratio,